Okay, I am recording the presentation. All right, so today we're doing something a little bit different than usual. What we've been doing for literally the last 6 or 7 years is going over strategies in detail, trading strategies, options, forex, or futures. This time I wanted to do something a little bit different. Reynaldo is someone I met back in 2009. He was actually hosting Jake Bernstein's very first meetup when he moved to California. And if you go to like Jake Bernstein's meetup site, I am member number 3, basically. So I also train with Reynaldo. We both trained together for many years now in Brazilian Jiu-Jitsu. I just happen to have this photo here of us. This is from last year, March. Here's Reynaldo right here on the left side. Reynaldo, did you get promoted that same date? Or were you promoted previously?
No, it was in October of 2018 in San Francisco.
Okay. Yeah. So yeah, this was last year, March 7th, I think it was. And literally 1 week later, everything shut down. So I got my brown belt last year, March, and he had already had his brown belt and his half Gracie. He is the head of the academy. It's his name that's on the building, basically. A lot of you have already seen Reynaldo's bio. And just to give you a quick preview of what's coming up, if you go to the website, on our next meetup will be on Sunday, October 24th. And we're going to be going over a future strategy, one of our favorite future strategies, actually. And we had kind of touched on it at the last meetup. So if you want to sign up for that now, you can. I'm not announcing it till about a week in advance, but this is on the meetup site. And for those of you who haven't traded futures yet, it is, you might like it even more than options because you don't have to deal with time decay. It's still well over 80-something% winning trades. And it's literally, for every trade, it's 2 to 3 times as profitable as the equivalent option winning trade. So it's definitely worth checking out. It might be something to add to your current option trading. They go together nicely because when you're not making money on one thing, you're making money on something else and vice versa. So definitely worth checking out. And we'll talk about that a little bit more, a little bit later on. But for today, a little bit different. I attended Reynaldo's presentation a couple of months ago on determining your trading personality profile, and I really, really liked it. I felt it was something that would be good for our meetup group to experience and go through and do some self-reflection. It's interactive, so plan on participating. You may want to get a pen and a piece of paper nearby, but plan to participate. And I think you get a lot of good feedback. And also you can speak to Reynaldo directly. Feel free to unmute. I want this to be as close to an in-person meetup as possible. So feel free to unmute, ask questions. You can type stuff in the chat window. But if you raise your hand, you may or may not be seen in a timely manner. But so feel free to unmute and ask a question. If you want to, type it in the chat window and we'll get to it. But I want to hear voices, get feedback, and this is our meetup, not just my meetup or Reynaldo. This is our meetup. So feel free to speak, ask questions, and get the most out of this as you possibly can. I'm going to stop my share and turn it over to Reynaldo. Let's see, how do I stop a share?
You
can just go and share?
Yes, I can just do that. Bam.
See if you can do that.
Yes, and then you should be able to see my screen.
There it is, good.
Perfect. I'm just double checking. Eversley, it's not being recorded at this point. Or is it being recorded? It's not being recorded at this point. Do you want to double check on your end, please, Eversley?
Let's see.
But it is being recorded.
Is it recording?
The said it was recording.
It is recording on my end.
Okay, fantastic. Well, thank you so much, Eversley, for inviting me to your meetup group. I really greatly appreciate it. It's always an honor. And thank you everyone for coming in today. And I'm gonna discuss more an introduction about myself as we go through. But today's presentation is about how to determine your trading personality profile. I totally believe that your personality profile should be in synchronicity with the trading system that you're using, especially whatever Eversley is teaching you. And then from there, you would be able to adapt in terms of your own personality. It's like having a car, right? You know, if you're a type of person who likes fast cars, then you're going to be buying a Ferrari or something really fast. But if you just like something nice and smooth, then you'll be perhaps buying maybe a Volkswagen or something that's, you know, that will suit you. But sometimes it's really challenging to get consistency in terms of your trading results if you really don't know who you are as an individual, which we're going to go through here today. I always believe that there's going to be 3 aspects of conditioning if you really want to be consistent in terms of your trading. Number 1 is your mental conditioning, which drives, in my opinion, around about 98%, but in actual fact, it's about 100%. But because we have to cater for your physical conditioning and technical conditioning in order to be in what we call in the trading zone. 1% is about your physical conditioning, meaning that if you're not well rested, you don't eat properly, you're not going to perform to your peak performance state. And then you have your technical conditioning, where you're learning from Eversley in terms of a trading system from point of entries, exits, money management, risk management, and so forth. So as we go through, please note that these following videos or clips are for the educational purposes only. Yes, it provides this video purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in this video is purely for demonstration purposes only and understanding the guide, and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive when using our product. So just a formal disclaimer, basically from there. And what's basically the agenda for today? Well, the agenda is in terms of introductory, which Eversley basically already did. And I'm also going to share in terms of my experience. And perhaps also I'm going to apologize in advance in terms of my words that'll be coming out, because I'm a type of person who likes to be honest in terms of the facts when it comes to trading. In my opinion, it takes time, money, and a lot of hard work in order to be where you want to be in trading. It's not a get rich quick scheme, definitely. You know, it takes time to be consistent, but the question is, how are you going to do that? Are you going to get there? It all depends on whatever belief systems that you may have. And then from there, I'm going to give out basically a bonus component, you know, on behalf of myself for you being a member with Eversley. And then we're going to have Q&A. So whatever questions that you may have, please feel free. Like what Eversley says, it's not about me, it's not about Eversley. This is basically about you in order to get the maximum that you want to get in terms of your trading. Okay. So a little bit about me. I started trading actually in 1996. So this is my 26th year basically of trading. My background is physics and math and computer science and math. I used to be a database administrator before I went full time in 2002. So since then, I never looked back. I had 3 major drawdowns in my trading career. And the first one was a major one. And this is where I really got into the human psychology, wanting to know more of who I am. Overnight, basically, I lost almost 7 figures trading gold. This one, so I grew up in Australia. Before I came to the US, and that's where I did my schooling, and that's all my family is at actually. But because of Taekwondo, prior to doing Jiu-Jitsu and meeting Eversley, I used to represent Australia in Taekwondo and competing in a world-class component. And this is where I met the mother of my 2 beautiful kids. And that's how it led me here to be in the US. But at the same time, my goal was to know about the more of the trading component. This is where I met excellent professional traders like Jake Bernstein, and then in the process met Eversley. I went to the trading floor, the CBOE, CME, Chicago Mercantile Exchange, as an observer to observe price, to observe how institutions are actually doing things compared to retail trading. I've traded basically all asset classes, and like obviously, my major trades are currencies and futures, which is basically the ES. But nevertheless, after losing that amount of money, I said to myself, what is it really? Because up to now, I still have a coach. In my opinion, I believe it is very important, because trading is not just a lonely profession, but you don't know the 180 degrees that's behind you. So we all have a belief system. These belief systems are being modeled based even before you were born. It's part of your DNA, in my opinion. And part of that is that when you ever since you were born, you model certain things based on what you see, hear, and feel. So based on your three aspects, basically, of your conditioning, and that creates of who you are as an individual, your persona, your mask, your personality. That's why whatever results that you're currently having at this point in time in terms of your trading is a reflection of your inner you based on your own inner being. And then through there, I did what we call Neuro-Linguistic Programming. I did hypnotherapy, and I got certified basically with NLP, and currently also studying with getting my master's certification in NLP, and also clearing, because there's also certain beliefs I still do have that affects my consistency from time to time. And it can go from ingrained to your inner subconscious where you don't even realize. So that being said, my last big drawdown was actually in 2017, went basically for a holiday in Bali, and I self-sabotaged myself, and I lost 40 grand basically overnight. And then I said to myself, what the heck is going on? I never coached, didn't teach anyone for basically a year, wanted to focus about me, and hence also getting coaching. And then after that, 2019, I never lost a single month. 2020, when the pandemic, I lost 2 months out of 12. And then for this year, I never lost a single month ever since then. So, but time and time, the question is why? Why do we self-sabotage our own success? Is it now because of our inner programming? The answer is basically yes. And so my goal is not just to coach people, but mainly more to inspire them to be a better version of themselves, utilizing the vehicle of trading. And the other part that I do love, that I'm very passionate about, is sports. Being an athlete, I still compete up to this day in terms of jiu-jitsu. I train elite athletes mainly in high school. And that's also my part of my expertise, is to get them in terms of their goals to where they want to be. So in my opinion, trading is just a vehicle to be the better version of you, to be the best of who you can be mentally. And then the only difference between trading and sports is that it has no physical contact, but you're using your own mental component on how you can conquer your own self to be a consistent trader. And hence is why in trading, it takes a lot of meticulousness. You need to be disciplined. You need to have a high level of integrity and a form of excellence if you want to be consistent basically in trading. By law now, in every a broker these days, especially in the currency markets, by law, by the disclaimer that if you're trading, they have to show the percentage of the people making money versus losing money. So on average, it's 72.3. So we'll just make it 75%. Retail traders generally lose money trading the currency markets. Out of that 25%, some are not trading, and hence they will take that into account. But if people who are trading consistently, only are approximately around 5% of retail traders will make money consistently trading the currency markets. And so from there, if you're making it or you're being consistent, congratulations. However, this workshop today will give you a little bit more of idea whether if the system that you're using is in synchronicity with your personality profile. Okay, so we're going to start. I'm going to give you, please, about maybe 60 seconds to get a pen and a paper, which I would recommend. It is very important because you're going to choose one statement out of two questions, okay, out of two statements, not a question. And then we're going to go through and determine your personality type. The result is got nothing to do whether if you're psychotic or you're crazy or whatnot. It's just simply giving you an idea where you're at when it comes to trading. So before we're going to begin, any questions, queries, or challenges before we may start? And ID, yes, it is being recorded by Eversley at this point. All right, first, okay, let's start. So there's two statements that I'm gonna pop out. Don't overly think it, just choose what comes up naturally, because sometimes what happens is that our conscious mind protects our own inner subconscious. What do I mean by that? There are two parts of the brain. You have your conscious side, which is now the outer part, and your subconscious, which is now the 6 inches between your ears. What creates you of who you are at this point in time is normally either based by your ego system of your conscious mind, protecting your inner subconscious. Trading is also basically the same, and hence that's why we all have inner opinions of the markets. But if you get rid of the ego and look at the markets objectively, the way how they are, then you will have a higher probability of basically winning. But how do you do that on a day-to-day basis? A good example would be this in terms of what we call cognitive biasness. When you're driving a car and you're on the highway and say 101, and all of a sudden you are on the middle lane and you're in a rush, you're in a hurry, and you're doing maybe 70 miles an hour, and basically what's the normal rate? 65 miles an hour. You're doing 70, 75, you're in a rush, you're late for work, and there's a car in front of you. Then all of a sudden you slow down and you're like, oh, come on, hurry up. Geez, why is this guy so slow? And then you slow down because you don't want to get in a crash. You're being boxed. You can't go to the left, you can't go to the right. And then the car behind you is also in a rush. And now you're being tailgated. And you're two things like, why am I being tailgated? This guy's crazy. This is what we call cognitive biasness. So in most cases, we will create stories in terms of why within that moment in time on why either the other person is an idiot or not. And this is being translated when it comes to trading. You see a chart, the market is dropping, it's telling you to get out, but because you have the ego of righteousness, you don't like to lose, and hence you will stay in there hoping that it's going to reverse back, but it's not going to happen. And then the next day you keep dropping until you lost X amount of money. And this is what normally happens. So not unless as part of your systemized methodology and a step-by-step, that you also can have a rule-based system based on your own principles and values, then this is where you will be able to create a good discipline when it comes to trading. All right, so there's two statements, just choose one that suits you the best. All right, we go to the first one. Number one, A, I tend to be meticulous and get each aspect of a job done as well as I can. Or B, I focus on the big picture instead of details and don't look at the small aspects of a job. So choose which one switch, A or B. Number two, A, if you could hear the thoughts in my head as I'm trading, you'd hear negative thoughts. Or B, if you could hear the thoughts in my head as I'm trading, you'd hear me analyzing the market action. A or B. Number three, A, I would choose a car that is comfortable and quiet. Or B, I would choose a car that is fast and handles well. So which one switch? Number four, I arrive early for appointments and events to make sure I'm not late. Or B, I often show up late to appointments and events and not very time oriented. Number five, I first feel frustrated and vent my feelings either outwardly or at myself when a problem occurs in my trading. Or B, I first focus on what went wrong and what I can do to fix it when a problem occurs in my trading. Number six, I generally go to my favorite restaurants and order my favorite foods when I go out to eat. Or B, I like to try new and familiar restaurants and foods when I go out to eat. Next one, number seven, A, I eat healthy foods and get a good amount of exercise and rest. Or B, I'm very busy and I always eat, exercise, and sleep as I should. Number eight, I trade by my gut or intuition. Or B, I trade by my head or with my head. Number 9, I avoid arguments and conflict. Or B, I like stating and asserting my opinions and hash things out. Number 10, A, I would be good at following an exercise or diet program. Or B, I would sometimes cheat on an exercise or diet program. Number 11, A, it is hard for me to handle setbacks in the market. Or B, I take market setbacks as a cost of doing business. A, I like vacations that are peaceful and relaxing. Or B, I like vacations where you see and do a lot of different things. 13, A, I get routine maintenance done on my car when it is scheduled. Or B, I don't follow scheduled routine maintenance on my car. 14, when I start winning, I feel on top of the world in the market. When I lose, I'm down or down on myself. B, I don't have any emotional ups or downs in the market. Last but not the least, 15A, I would like a job with a stable company that pays a guaranteed salary and benefits, even if I might not get rich. Or B, I would like a job with a startup company that offers me a chance to get rich, even if I might get laid off if things don't work out.
Hey, Reynaldo,
Yes, ma'am.
could you repeat number 3 again, please? 3A and 3B? I just missed that one.
Sure, no problem. Let me go through.
And I missed 1A and 1B.
Sure,
Yeah,
no,
can you just go over the whole thing again? I'm sorry, I missed a lot
not
of
a
them.
problem. No problem. So my pleasure. So let's do this. Okay, so oops, you can go. Let me go back. Okay. Okay. So 1A, I tend to be meticulous and get each aspect of a job done as well as I can. Or B, I focus on the big picture instead of details and don't look at the small aspects of a job. Number 2, if you could hear the thoughts in my head as I'm trading, you'd hear negative thoughts. Or B, if you could hear the thoughts in my head as I'm trading, you'd hear me analyzing the market action. Number 3, I would choose a car that is comfortable and quiet. Or B, I would choose a car that is fast and handles well. Number 4, I arrive early for appointments and events to make sure I'm not late. Or B, I often show up late to appointments, events, and not very time oriented. Number 5, I first feel frustrated and vent my feelings either outwardly or at myself when a problem occurs in my trading. Or B, I first focus on what went wrong and what I can do to fix it when a problem occurs in my trading. Number 6, I generally go to my favorite restaurants and order my favorite foods when I go out to eat. And B, I like to try new and unfamiliar restaurants and foods when I go out to eat. 7, A, I eat healthy foods and get a good amount of exercise and rest. Or B, I'm very busy and don't always eat, exercise, and sleep as I should. 8, I trade by my gut or intuition. B, I trade with my head. 9, I avoid arguments and conflict. B, I like stating and asserting my opinions and hash things out. 10, I would be good at following an exercise or diet program. Or B, I would sometimes cheat on exercise or diet program. 11, A, it is hard for me to handle setbacks in the market. Or B, I take market setbacks as a cost of doing business. 12, I like vacations that are peaceful and relaxing. I like vacations where you see and do a lot of different things. 13, A, I get routine maintenance done on my car when it is scheduled. Or B, I don't follow scheduled routine maintenance on my car. 14, A, when I start winning, I feel on top of the world in the market. When I lose, I'm down or down on myself. And B, I don't have many emotional ups or downs in the market. Last but not the least, 15, A, I would like a job with a stable company that pays us a guaranteed salary and benefits, even if I might not get rich. Or B, I would like a job with a startup company that offers me a chance to get rich, even if I might get laid off if things don't work out. Alrighty.
Can you go to the previous page? Sorry.
Sure.
What if you're in the middle, some of these?
There's nothing. Very similar to trading. Either you press the button, you don't press the button. Unfortunately. All right. Can I move forward now, or you guys need more time?
I'm good.
Good. All right. Okay, let's move forward. How to determine the results. So there are 3 categories that we're going to do. These will be based on conscientiousness, neuroticism, and risk. So for the first one, I want you to look at items number 1, 4, 7, 10, and 13. I want you to go through it. Number 1, number 4, number 7, 10, and 13. So have a look whether if you had more A's or more B's. Then you can, if you want to share, feel free. You can type it in the chat box, no worries. So here it is that if you scored mostly A responses for these items, you're what we call highly conscientious. A conscientious person is someone who has a high degree of self-control and perseverance. Conscientious traders are good rule followers, and they often do well trading mechanical systems. So if Eversley is teaching you a methodology and it's a step-by-step and it's very mechanical and you are highly conscientious, then the system will be good for you. Someone who can persevere, someone who can follow or very, very disciplined. Remember, to be discipline comes from the Latin word disciple, right? Discere as well, or actually decide, making reasons. But as disciple or being a student, and this is how a learner would be able to determine and could follow certain rule-based system or not. This is when you go to school and there's certain rules within the school, and hence as part of also our programming, that if you're not getting A's, and this is actually a big problem or big issue within the school system, is that students have to be almost be perfect, gaining perfectionism 100%. Because now if you're not getting 100%, I'm just going to share in terms of my experience. I've always been very competitive ever since I was a kid, even with school. And it's almost like, okay. And then part of as well is a conditioning that if you're not going to do well, then maybe perhaps you're not good enough, based on you're not getting validated by your parents. In this particular case, like acceptance or validation from my mother or from my father. And that translated as well with my sport, because I got silver or bronze each and every time I go home. And then all of a sudden my father would say bronze again, gold, silver again. And hence I'm like, fine. I'm going to find a way to get gold in order to gain love or acceptance, to be validated. And then through there, when I got gold and became a national champion, I went home and then basically I showed it to my father and said, hey, look, check it out. Will you love me now? And that's from a subconscious perspective. Mind you, this is also from me getting coaching through my coaches, right? And then all of a sudden, like, he didn't say anything. Okay. Then after that, I proved it to myself that I could be a champion. And every time that I go to the finals, I didn't want it anymore because I knew I could get there and it's easy. In trading is also the same, that when I'm making money and I'm winning, then all of a sudden I will self-sabotage it. I will win maybe 8 in a row. And then the 9th one, the losses will be bigger than the actual profits itself, because from a subconscious component, it's too easy. That if it's something's too easy, then I will find a way to crawl back up in there in order for me to be on a competitive note. So it's no longer about the money component, Because at the end of the day, if your goal is to make money, then that should be the driver, the motivator. For me, that wasn't the motivator about making money. It's mainly more about the competitiveness that I can basically keep winning. It's so interesting. That's why conscientious traders, in terms to be disciplined, there's a lot, all value systems, by the way, value system is something that is important to you. So if success is important to you, then you will do anything and you will prioritize that value to be successful. But to be successful, you need patience, you need discipline, you need meticulousness, you need focus, and so forth. You need the passion, you need desire. And hence why in trading, if you are not there when it's time to trade, then it's on you. It's got nothing to do about Eversley being the coach, and it's got nothing to do about the system. It is mainly about you, because you're not there taking full responsibility for your own actions, that when it's time to train, it's time to train, or it's time to trade, it's time to trade. That's the bottom line. So here, on the other hand, traders that are low in conscientiousness will have difficulty following explicit rules and often trade more discretionarily. That's why there's also some discretionary traders. When I was on the trading floor observing traders, like, these guys are institutional traders or people who used to trade on their own money. Some will either will have a system base, or that's mainly more of the intuitive component. This is why if you're a type of person more who has intuition, and in my opinion, in terms of my rule-based, intuition will supersede any form of trading system. In other words, an example would be for me, I got in with the dollar against the Canadian dollar, and I knew that it's going to go up. However, at the same time, I got in a little bit way too early, and it is keep dropping, and it's going almost close to my stop loss. And so what I had to do is I had to hedge my position in order to minimize basically my risk. And then I was looking into it. I only have 2 hours sleep because I was monitoring it because I have a big position in there. And all of a sudden, boom, I just basically, I felt it. I closed my short position, and 1 hour later, the price went to the upside. And then 1 day, 2 days later, it went to the target point where I wanted. And it was the biggest trade basically for the year for me. And hence, actually, for September, it was great because I doubled my account. But from that component, though, then intuition is an important element. And intuition will also protect you based on your inner fear. Remember, though, with fear, there's 3 things that you're going to experience. Either you're going to fight it, or you're going to hide, or you're going to fly away. So when you have a losing position, and this is where you don't want to take full responsibility, right? You just want to sleep early. You're like, oh, screw it. You're going to let it until it goes to the stop loss. But deep down inside, from an intuitive component, it's already telling you, hey, you better get out. That's why this component, like personally, I always tell my students, I do not believe in demo trading because the subconscious knows automatically that it's not real. The advantage of trading Forex is that it gives you the ability with an X amount of capital, let's say $500 or $1,000, that's the amount of money that you can lose as part of your education or as part of your learning experience, especially if you're a novice or intermediate. And hence is why I don't believe in demo. I believe it's for me, it's like being sports, which Eversley basically knows, you can learn a technique over and over again. You can punch, you can kick, but not until you will prove whether that theory is really working in real time, where the other person and I will move, will punch, will kick. And it becomes more challenging for the application of the theory, putting in a real environment. In my opinion, trading is also the same, that once you're learning a theory from a hypothetical, quote unquote, hypothetical component, you need to apply that in a real-time environment where emotions are being involved. That's why from a conscientiousness perspective, that's affecting your emotions, the question is, do you have high values that you really believe in and that you really apply in a day-to-day basis from a moment component? But in most cases, we are not really aware of our inner thoughts, our inner being anyway. Sometimes we impulsively react to people's words or with the way how the market reacts. without actually really thinking of what the consequences could be. Okay, so these are the things that we need to really identify. And also, hence, a trader who is low in conscientiousness will get frustrated when he tries to trade in a highly structured manner. Such a trader would do better with bigger picture trades that do not require detailed rules and analysis. That's why right now, that if you are a person who doesn't like rules, then mechanical systems is not the right fit for you. Similarly, very active trading with strict risk management will come easier to the conscientious trader. Less frequent trades with wider risk parameters will also come easier to the trader lowering conscientiousness. Who in this room have read Market Wizards by Jack Schwager? Which I would recommend too, by the way. There's 3 books that I would recommend. One is my book, and as a bonus, thank you for me getting invited by Eversley. Email me, and I'm going to email you a copy, basically an ebook copy of my book for free, basically for you. Number 2, Principles by Ray Dalio, which I highly recommend. That's actually one of my favorite books. Probably that's at the top of the list. If you don't know Ray Dalio, he's same like everybody else, lost a lot of money at the very beginning, borrowed money from family, and he grew it until basically he managed about $160 billion of money management. And at the same time, one also my favorites is Jack Schwager's Market Wizards, interviewing great traders, even though it's been written in the early 1990s, actually 1988, and got released in 1990. There's still a lot there to learn, mainly from a mental component. All right. So
Can you say Ray Dalia's book again? What is the name of it?
it's called Principles by Ray Dalio. Okay, Principles. I will give you my email address at the end of the presentation, no problem. And then the other one is Market Wizards. And these are basically all interviews by Jack Schwager from top traders who used to trade basically on the floor, or they trade by themselves. And then my book is more like a book/workbook as well. Okay, so that is number 1. Whether you're either highly conscientious or lowly conscientious. Highly conscientious simply means that you have high perseverance, you're very well disciplined, you can follow rules. Low conscientiousness doesn't necessarily mean that you cannot make money from trading, because there's also really good discretionary traders, but mainly more you're using gut cues when you're trading, and you don't like rule-based systems. Perhaps you're also a type of person who likes to rebel in terms of society or whatnot, and you don't like to be told. So that's basically a personality type of a low conscientious trader. In my opinion, I believe it's a balance of the two, where you're using your left side of the brain and your right side of the brain. Now we're going to go through the next one. Number 2, 5, 8, 11, 14. Number 2, 5, 8, 11, 14. I want you to look into that, please. Number 2, number 5, number 8, 11, 14. And we're going to discuss about neuroticism. So if you scored mostly A responses for these items, you are relatively high in neuroticism. What does neuroticism mean? It simply means the tendency to experience negative emotions. So if you're a type of person who are seeking certainty from the uncertainty of events trading in the markets, then you will experience a lot of negative emotions of fear. And then fear can also be translated as well from a greed component. So there's 3 powerful negative emotions that every trader will experience: fear, greed, and the last one is regret. And hence, that's why a lot of people would like to go in what I call it people who sit on the sidelines. Why? Because if from a subconscious perspective, and that they're seeking perfectionism and they don't like to lose, then they will sit on the sidelines. Why? Because they need to be validated and say, hey, look, see, luckily I didn't enter, because if I did, I would have lost X amount. On the other hand, it's a double-edged sword, be sitting on the sidelines. On the other hand, that if it went to the way they wanted but didn't enter, then they will have that regret component and just say, oh man, I knew it. It is going to go down and I would have made X amount of money. Hence the shoots, the coulds, the woulds. And remember, from that component, it becomes now from a point of regret. And then from that regret aspect, it becomes into sadness, and it can lead from one or after the other. Then what we call it a emotional guidance system. It becomes in a spiral motion to the downside, and this is where you have negative vibration. But when you are making money and you basically say, for example, you took action, you feel happy, you feel elevated, but sometimes euphoria can kick in. When you also in a euphoric state, you get overconfident and you get complacent, and this is also where you start to lose, and then start to double your money because you're being overconfident that one trade will wipe out basically all your profits. In my opinion, everybody have experienced that before. If you're new to the game, you will experience it at one point in time. But if you have, or you've been trading, you know exactly what I'm talking about. All right. Okay. Thank you, Pri, for helping out there with the chat. So the trader prone to neuroticism tends to experience more emotional interference in his or her trading. Wins can create overconfidence or euphoria, from what I stated. Losses can create fear, self-doubt, and hesitation. The trader who is low in neuroticism is more likely to react to trading problems with efforts of problem solving and analysis. He or she will not take wins or losses particularly personally. A person who is highly neuroticism is emotionally sensitive and cues this sensitivity to obtain a gut feel for market action, which is also an important element. Excuse me. So let me share something actually with you here for a second. Put out a chart so to make it more visual. Okay, bear with me, please. And let me take this one and put it across. Boom. There are, when you're looking at a chart, there are two components that is only pretty much valid. One is price and one is time. There is a third important element in trading that also defines your personality type. So you have your y-axis, x-axis, you have price, you have time, and the last one is what we call distance, which is very important. This distance creates not just from a feeling component, because this, where the big question mark, is where the uncertainty of events basically happens. In my opinion, there's also three types of analysis that you need to do to create the probability when you're entering a trade. So there's three processes, right? There's a before trading, you have during trading, and last but not the least is after trading. So these are the three time frames that it will happen from one after the other. So before trading, you need the left side of the brain. From a logical point of view, you need to analyze, and hence is why you're learning a system from Eversley. That's what he's teaching you, to create simply that logic to create the probability. And then during part is where the dangerous part. It's why I guarantee you, and I've done these experiments over and over again, that if there's about 25 people in the room, if we're using our own perception based on cognitive biasness and say there's no system involved, everybody will have a different opinion. Now, eliminating holding, or you not getting in, either you buy or you sell. Some in this room will say, I'm going to buy. Some in this room will say, we'll sell. But to be honest with you, both people will make money, will be able to make money depending on the strategy, depending on the personality type. But because of time, if we're dealing only with one time frame, which is the daily time frame, and say for argument's sake that we all agree that we're going to buy, and there are certain conditions that needs to be set, there's an exit point, there's a stop loss point. Do you believe that everybody in this room will have the same result? What do you think?
No.
No.
Absolutely not. Why? Because during trading is where the problem lies, because you're no longer using the left side of the brain, you're using the right side of the brain, which is mainly more from an intuitive component, but sometimes that intuition can be also be very dangerous because it's no longer using your intuition. This is now utilizing your ego of fear, based on fear-based. Oh, I'm going to make money. Oh, I'm losing money. So if the price is dropping, someone in this room will close it even before we'll hit the stop loss. And that is why results will always vary. And hence a disclaimer that past performance is not indicative of future results. And you cannot guarantee a certain result because of the future. It's so interesting. This is from a psychological perspective. But if you give someone a rule-based and say, hey, do not touch it and live it, then we will get the same result. However, someone will still be able to control it. Why? Because you are your own boss. If you are an employer and you are the CEO of your own company, mind you, trading now is a personal business, you will screw it up whether you like it or not, because you're with the lack of awareness. Now, if you're an employee, on the other hand, and the employer will tell you, hey, these are the rules, and if you disobey those rules, you're going to get sacked. I guarantee you, you will follow those set of rules. And how do I know that? Because I had basically a student, really good student, and he's very disciplined. And basically a trading firm in Chicago asked me, I said, hey, do you know anyone? I said, dude, this guy, take him. In actual fact, he'll be a better trader than me. And he's so very strict, but at the very beginning, he didn't want to take risks. In trading, on the other hand, you need to take risks, because if you're not taking any risks, then there's no point. But I told him and said, hey, Mark, just give him time. He's going to get there. Now, every week he makes money basically for the firm. I believe he's a top 2, and his goal is to be #1 in the trading firm. And this was about 3-4 years ago, and he's still in the firm, and he basically trades. And now he moved to Puerto Rico, actually. So, but nevertheless, this distance creates that emotion of fear, that greed. But if you can control that emotion, and you are very disciplined, you have a good rule-based system from Eversley, you will make money almost guaranteed consistently. But you need that awareness when the drawing happens, actually. So from an intuitive perspective, that if you no longer see fit, that it doesn't really want to operate, doesn't want to go the way how it's supposed to go, then get out, then just go the other way. For me, it's like which probably Eversley will also would be able to attest. When we're sparring, there's what we call transitioning. And if something doesn't work, you cannot just stay there, because it takes a lot of energy, especially if the other guy is heavier, is stronger. You cannot fight it. Markets are also the same. They're too powerful, they're too strong. But if your ego is more, if you believe that your ego is more beneficial, then you will hang into there until it becomes a loss. But at the end of the day, always remember, though, that the market doesn't know that he or she is in a relationship with you. Every time that we're trading, we are always in a relationship. And that's where people don't understand. Relationship with what? You're in a relationship with the markets. When you're in a relationship, there's a certain amount of expectation. And what is that expectation? What is that expectation? Anyone?
I follow the technical analysis, so I follow the
So
analysis? I expected to follow the analysis, should I say.
yeah. However, in the end, what are you trying to expect? You're expecting to make money, correct?
Yes.
To win. This is your level of expectation, is to make money. Now, what happens if you're not going to make any money and you say you lost? And here is an amazing aspect. When who here in the group has kids? I mean, I do have 2 beautiful kids. And you'll see it. But if you don't, I want you to observe kids. And this is why kids are being labeled at the age of 2 as terrible 2s. And this is what's happening. A child at birth, at their purest state, when you see a child, you don't know what they're thinking. And the only way that they can communicate is through crying. That's why in relationship, in general, communication is so important. And if you're not communicating based on your honesty, I guarantee you the relationship wouldn't last, because there's no trust, and there's no trust. There's nothing in terms of the relationship to be binded. So when a child, on the other hand, going back to childbirth, the child will communicate through crying. There's a different cry when they're hungry. There's a different cry when they're tired. There's a different cry when they're wet. Why? Because they need to be expected to be fed when they're hungry. That's why they cry. They expect to be falling asleep when they're tired. They expect to be changed when they're wet. So that level of expectation has already brought in from childbirth. When you see a baby, that's what's happening. And this is also what's happening from 0 birth to the first year. They're learning how to walk. So from their back, they crawl to their stomachs, and they start to be on their knees. They start to crawl, and they will have their first baby steps. And then through there, what do mothers or fathers or parents normally do? Yay! Good job, great job. So now they are giving them positive feedback to keep going. And so interestingly enough, that when they reach to a certain point, at the average of 2 years old, and they start to climb, they start to run, and they're not being aware of their surroundings, what do parents normally say? No, stop, don't do that. All these are now limitations, limits. The child, and you can see in their face, from being happy, and then all of a sudden they will frown, and they start to cry. How come that mommy and daddy is not supporting me, giving me no positive feedback? I'm just pleasing, I'm just doing what I'm doing, right? And that's from the limitation component. And when they're trying to climb and they say no, that fear has already been instilled. And if they do something wrong, guess what? Slap on the face. That's part of conditioning through feeling. And then through auditory, stop, don't. Visual based, parents face angry, right? All the aspect from a physiological component is now being put in there from a subconscious perspective. And then they grow, they keep growing, they want certain things, and parents are not explaining to them why they're not getting it. Everything, all they hear is no, stop, don't do it. They're just limitations. And then they come to a teenager. What do they now do? They will start to rebel. Don't tell me what to do. And hence, they start to trade. Say, going out to the future, they start to trade. I'm not going to follow your own set of rules. Why? Because I've been following a set of rules since I was a kid from my parents. And now I don't want to do that. So I want to be discreet. I want to do it on my own. Screw you, man. What would I follow your own set of rules? And then they start to blame the coaches. Oh, the system doesn't work. It's true. But they don't realize the actual problem. And this is what I tell you up front, whatever results that you're currently having at this point in time is not Eversley's fault. It's not the system's fault. The problem is you, and that is a fact. Because you just don't know what you don't know in terms of the amount of layers you have since childbirth. Whatever beliefs that you have that caused you to limit your own results, you will self-sabotage them. And then from the perspective, you just don't know what you don't know, because the 180 degrees that's in front of you, that's all you can see. But you don't know the 180 degrees that's behind you. Even you look back as far as you can, you won't be able to know, because you just don't know. And hence, it's why if you do not have a coach and you do not read about self-development, or you being the better version of you, you will have the same issues over and over again, like a vicious cycle. like Groundhog Day. Why? Because you just don't know. So not unless you find that out, and you will find the root cause of the actual problem, until the day you die, you're going to have the same issue over and over again. And from part of my spirituality, there is a saying, a belief, that you only reach nirvana once you basically have found going back to your root source. There's also a saying that even before you were born, as part of your DNA, you already molded it from somewhere from your past lifetime. And that you are choosing your parents because you have to learn from something, from them or from anybody else. That's why in trading, even though you are in a relationship and you have a high level expectation because of you, it adds a lot of pressure. Too much pressure leads to stress. Because maybe perhaps you see yourself as not being worthy. You are not worthy. And sometimes a person who sees that they're not worthy, they will self-sabotage it to gain acceptance from outside source of their environment. And they, oh man, I lost $100, $1,000. Please love me. It's screwed from a subconscious perspective. And that's what happens. That's why Ed Seikoto, which is actually one of the probably best traders people say of all time, because of his results with his fund, where he's, I think, made like 6,000% or 30,000% from his own fund, stated himself that everybody gets what they want from the market. Some likes to lose more than others. So sometimes it'll just take a decade, 2 decades. It took me around 10 to 15 years to get consistency. And hence is also why I love teaching. I love teaching because it's just also not just from a reflection point of view, but from a technical point of view too. It gives me all the ability to see certain things that I haven't seen. That's why if you're not practicing, by the way, and if you're not putting time in your trading, you're not looking at charts, you're not analyzing, you're not thinking, you're not visualizing, you're not meditating, it's going to be challenging for you. And that's the bottom line. Coming from a trader, like, trading for the past 26 years. That is the bottom line. However, if you're still here on the other hand, and you know what, I don't know how many people sign up, but if there are a lot of people sign up and they didn't even attend and didn't bother coming, telling everybody that they're going to come, that's already a result of who they are as an individual. And that will translate as well as part of their results when it comes to trading. Why? Because they just don't know what they didn't know. Remember, it all comes down from your modeling, from your outer environment, mainly from parents. Also, there's a saying also from your grandparents. And when you go to school, you hear certain things. And that's when people go, or kids go to school, kids are mean. They will say just directly there and then. Why? Because they have no filtering. Filtering only happens at the age around 12 to 15 years old. And then they will start to think for themselves, because that's where the logic knock-on starts to happen. And then with that teenage years, they want to be part of the group. Oh, I'm not cool enough, so I want to be part. I want to be cool. And I will finally do anything in order for them to be cool. Oh, maybe I'm gaining weight. I'm getting fat because someone told me I'm fat. Then become self-conscious. That's what the terminology self-consciousness happens. And not unless up to now you start to realize that if you don't really, sorry for my language, don't give a shit about what other people think, and you just think of what you think because you're confident, just the way who you are, then you will have good results as well when it comes to your trading. Okay, so that's from a perspective from a neuroticism component. So risk, let's discuss now the third one. Oh, before I will continue, any questions in terms of what I'm discussing so far? Does it make sense? Does it make sense? Does it apply to you? Did it happen to you? I mean, what I'm sharing with you is based on my personal experience too, by the way, okay? All righty, so nothing. Okay, last but not least is risk. I want you to look at items number 3, 6, 9, 12, and 15. Number 3, 6, 9, 12, and 15. All right. So if you scored mostly A responses for these items, you're a relatively risk-averse trader. By the way, I'm sorry, I'm so very passionate of this, especially from a psychological component. If there's any questions, please type it in your chat box for me, by the way. Just stop me and say, hey, Reynaldo, can you explain more of these? Yes, 3, 6, 9, 12, and 15. Correct. Correct, Pri. That's correct. So if you scored mostly A responses for these items, then you are a relatively risk-averse trader. A risk-averse trader is one who cannot tolerate the possibility of large losses and who would prefer smaller frequent drawdowns with controlled losses to larger wins with greater drawdowns. Trading with careful stops and money management and trading smaller time frames where risk can be controlled with the holding period will come most naturally for the risk-averse trader. So remember about distance, time, and price. Time plays a very big role when it comes to trading. And why do I say that? Because here within the time frame, you have 1 hour, 4 hours, you have daily time frame, all the way to as low as 1 second, a tick chart, or even a 1 minute time frame. This is where the risk is basically involved. The shorter the time frame, this is where a risk-averse trader will be. So there will be day traders, there will be momentum traders, there will be scalpers because they can control the amount of risk within that time frame. Someone who is more of a risk taker can handle risk, bigger time frames, or like a daily and a weekly. And the reason being is because they can gamble a little bit more. And if a person is lowly neurotic, that they can handle that emotion from a bigger time frame perspective, then these are traders that are swing traders, trend followers, investors. Okay, so that is the difference between the two. The goal of a trader, in my opinion, is to be adaptable in any time frame, that when opportunity is in there, that you can take it from a short-term time frame. For example, I love trading FOMC reports or anything that is high impact news. And if I can gain 20 to 30 pips within that moment, it's easy to make a couple $100 within a minute or two, then so be it. But I can control that. But also there are different strategies where as a trend follower, I call myself as a professional observer that observes the markets. I am not part of the market because I don't want to be a retail trader. I want to be in the direction of where institutions are trading. That's why from my observation, being on the trading floor, I want to be where they're at. I want to buy where they're buying. I want to sell where they're selling. And hence also it's like a chess game. I need to know what is it? What is their plan? What's going on? So it's a chess by chess. It's a move by move. And so from there, if you're adaptable with that type of environment, you would be able to create different strategies. That's why I also have multiple trading accounts, one for short term, medium, and longer term. Okay, so
Can I ask you a
I know
question?
that, yeah, go for it.
Did I hear you correctly? Did you say if you're not particularly risk averse, then you would like swing trades, trend following, and investing?
Correct.
Okay.
So if you are more of a risk taker, then you would be able to handle bigger time frames. But if you're risk averse, then smaller time frames, like you're dealing with, say, 5 minutes or 1 minute, and that's a time frame that you're at, because you can control that risk, you can control that time. And these are the type of people who cannot sleep overnight. If they put in a trade and they leave their trades overnight, they won't be able to sleep at night, especially if they're highly neurotic and they're risk averse. They won't be able to handle it.
Was that in group? I'm sorry, in group 3, was that was it A that was risk aversive or B that's risk aversive? Sorry.
If you are if you have more A's, then you are more of a risk averse.
Okay, so B are the risk takers.
Yes, but
Okay.
like see from here, I see from Eversley, he's got 3 B's and 2 A's. Then he's risk tolerant, so he's in between. He can do short-term trades and he can do swing trades or medium to longer-term trades. All right, so a risk-seeking trader is one who enjoys no problem, who enjoys stimulation and challenge. Larger positions and longer holding periods are easier to tolerate for the risk-seeking trader. Very often, the risk-seeking trader will be impulsive in entering trades and will have difficulty trading during periods of low volatility or when he is bored. The risk-averse trader often experiences difficulty hanging on to winning trades and will cut profits short To avoid reversals, this trader will be challenged during periods of high market volatility. Position sizing is key and then overlooked as a trading variable. Bingo. When I also started to realize that the key, it's not just about position sizing, but it's all about risk management and money management, then my results also basically changed. So in other words, from a mathematical component, I'll just give here random numbers actually to make it easier, okay? For example, you have a $10,000 trading account and the maximum risk that you're willing to take is 10%, which equates to $1,000 per trade. This is your maximum loss that you can take per trade, 10%. I know that everybody in this room should be able to create what your maximum risk is going to be. Depending now that you know part of your personality type, that if you're risk averse, then 10% won't be for you. Maybe 1%, 2%, 3%, I don't know. But if you're risk more tolerant, then 5%. But if you're a risk taker like myself, 10%. If I have a high probability, for me, it's like playing poker. If I have a royal flush, then I will pretty much almost go all in. And that's how, of course, mind you too, though, as a disclaimer, everybody's different and this is just me, okay? And this is my personal type. I'm a risk taker. I would go and do basically jump from off the airplane. I like speed. So that is me. I like to go, you know, with one of the questions. I like to adventure out. I don't just like sitting in the room and just relaxing. I like to do both actually, but in most cases I'm adventurous. And I like things that are spontaneous. So when it comes to risk, sometimes I go 10%, sometimes I go 20%. With one trade if I have a high probability. For me, it's all about probability. The probability of winning, for me, numbers don't lie. So if I can create a probability, then I know automatically aware on how much I'm willing to risk. That risk should be calculated from your stop loss that creates your position size. Very important to note. That's why when you're dealing with bigger time frame, as price goes up to a retail price, your risk becomes larger as well. It increases magnificently. I have a terminology that I use between two zones, from a level of demand, or people will call it support, from a level of resistance, some people will call it supply. Between 2 points, depending on where you're getting at. This is what I call it, you are in a war zone. I want you to imagine support and resistance are being utilized by a major stop that an institution is basically willing to sell, no more, no less. That's what creates a lower low or higher low. I'm not going to make it more of a technical class. That's Eversley's basically job there to teach you guys. But here, when someone is supporting a price point at demand, that's a very strong, solid price. So I just want you to imagine that you are a reporter taking photos at war, and you have a safe zone. And this is what I call it my safe zone. The odds and probability that you're not going to be stopped out is highly probable. However, if you are at war and you're now getting a price, say at this price, anywhere that you put your stop loss on this side, and you can see it very clearly, you're going to get stopped out guaranteed. Why? Because you're still in the war zone. You're not in the safe zone. So that's why if you're now dealing from a neurotic perspective and you're being impulsive, you are going to get stopped out. You're going to get killed over and over again, basically. Okay, so that's why it's important to note those three different categories from a conscientious perspective, whether you're highly neurotic or lowly neurotic, whether you're risk averse, risk taker, or risk tolerant. That's why these two, anything in terms of time, this is where you're risk averse, you're risk taker. Someone using a 4-hourly or 1 hour will be perhaps maybe risk tolerant. Someone is in between. So in conclusion, It is mainly the blending of these personality traits that creates a good fit with one's trading system or methodology. The ideal personality pattern of a trader would be highly conscientious, someone who can follow rules, and they have the integrity to follow their own set of rules. They are risk tolerant, and they are lowly neurotic, that they would be able to handle their own emotion. Such traders are good rule followers. They are disciplined in their preparation and are disciplined to follow trading rules for entries, exits, money management, risk management. Last but not least, they don't take losses personally. And hence, that's why if you have a high level of expectation. And did you know that when your expectation is not being met, you're going back to your inner childhood and you're going to create a tantrum? You don't even know it. I can't believe I freaking lost. But those are the things in terms of tantrum that leads now to hope. Hopium is a dangerous drug when it comes to trading. But if you start to acceptance, that losing is part of the game and you're not expecting anything. Likewise, when you start accepting your partner, your wives, your husbands, your boyfriend, your girlfriend, then this is where the relationship will be a very nice relationship. Isn't it interesting? As a parent, you know, you will love your kids unconditionally. However, with partners, on the other hand, there's always going to be a condition. Trading is also the same. There's no level of acceptance. It's just a lot of conditions. Dang it, you're not making me money. You know what? I'm going to double down. Next thing you know, you're revenge trading. Why? Because the level of expectation that you put into yourself as an added pressure because you want to win and you want to make money. So if you take money out of the equation and not think about money and think it of as a game, that losing will be part of the game and you're just mainly accumulating the amount of points, you will make money. Almost guaranteed. And it's a big G word, but it is almost guaranteed that you're going to do it. So traders who are most poorly suited to trading are those that are risk-seeking, highly neurotic, and low in conscientiousness. These are your gamblers. And if you have a gambling mentality, it's pretty much a challenge to coach someone who has a gambling mentality. Then you might as well go seek actually a Gamblers Anonymous and stay away from trading. Because at the end of the day, yes, we are professional gamblers. When you're a professional gambler, you're now dealing, like I said, with the probability, like when you're playing poker at a casino. You go to Vegas, you can have fun. Yeah, no problem. But at least you know, like, okay, $200 maximum, that's it. I'm going to be here as for fun. I'm not a professional. I'm not a professional player. I'll just play for the sake of playing. If I make money, great. If I don't make money, no problem. But in most cases anyway, from a gambling mentality, they're already thinking, okay, or from a fun component, $200, excellent, no worries. When people are also trading and have the same thought patterns, it's okay, I can risk $50. But when you're a professional gambler, on the other hand, you know exactly what your stop losses are going to be, your risk. That's why it's very important for you to calculate your risk first before you even enter a trade. So if you don't have a trading plan and you're going at, basically you're going to war, you're gonna get killed. So that's why you need a plan before you execute a trade. What's your offensive strategy? What's your defensive strategy? Averagely will teach you that in terms basically also with options, as well in terms of spreads, right? Or butterfly component strategies. Doesn't matter which one's with, you'll make money. If you're trading futures or you're trading currencies, the same. What is your offense? What your defense? Can you save that trade? Can you hedge your positions and so forth? Yes, these are now advanced stuff. But if you don't have the basics and know the basics of trading, you're going to be in trouble as well. Another great book, by the way, by Dr. Steenbarger. He is a trader basically in trading. Van Tharp doesn't trade anymore. He's just focused about coaching. And he also knew that trading probably wasn't for him, according to an interview with Van Tharp. But Dr. Steenbarger, who is also a psychologist, is basically trades based in the market. stated that I strongly suspect that cognitive style is just as important as personality style in trading. Some people process information intuitively, relying on gut cues and subtle nonverbal information, which is so true. That's why from a during process perspective, where you're not looking from an analytical point of view, then if you're not meditating, by the way, I highly recommend you do so. If you're not visualizing, I also recommend to do so, because meditation helps you the ability to be in touch with your inner intuition. And hence, when you're in that essence and you're on your own being, there's no ego, you will know exactly what to do when you are now in a trade where it doesn't feel good, it doesn't feel right. It's something I can't explain. Probably everybody in this room have already experienced that, but it's just something, it's a mystical thing. And to get more intuitive is through meditation. Likewise, as one trades get shorter and shorter time frames, moving from swing to scalping, it is less practical to expect explicit analytical routines to guide trading. Meaning that when you're scalping the markets, you don't really look at the charts anymore. Likewise, being an observer, being on the trading floor, you don't see charts. Traders will look at the overall chart. That's why they look at a bigger time frame, and hence is why they use to earn their moving averages, 150 or 25. And then from there, they would know automatically whether they should be buying or selling. But when you're on the trading floor, you're on the pit, you don't actually see that. So from a, let me have more visual component. And this is what it looks like. I couldn't get into neuroscience. There's 2 times that I was there, but they were too strict. The guy that actually wanted to go let me in, he got sick, unfortunately. But this is what it looks like from, that's NYMEX, Recibo. I used to take clients to SIBO. Here's the Chicago Mercantile Exchange. Unfortunately, they're shut down because everything is algorithm based, but this is what it looks like. And so notice that when they're trading, there's no charts. You only see pure market action, proper order flow. You know automatically who your opponents are, whether they trade from institution, a broker, a hedge fund manager, or people that trade from their own, using their own money, who have a seat. Some they pay 10 grand to 100 grand to be in the seat. Some will lease it, but nevertheless, that's what it looks like. You do not see a chart. So us, on the other hand, we need to use technical analysis to define entries and exits. But if you don't have the vision in terms from a mechanical perspective between buying and selling, it is going to be also be tough. That's where you also need to learn to do that. Okay. So that being said, last but not least, conversely, longer term trades often benefit from modeling and statistical analysis from info traders where the edge might lie. So how traders process information most effectively is a neglected variable in selecting proper timeframes to trade. So 3 categories that defines your personality should be in sync with the trading system that you're using. Time frame, multiple time frame analysis, or the time frame should be in synchronicity with your personality profile. And that is simply the conclusion from my presentation today. Any questions, queries, challenges, anything that you want to ask me right at this point?
I have a question.
Yeah.
I'm pretty much like 3 and 2. First of all, for number 1, is it more A or more B? Is that is I guess consciousness?
Yes. So if you have more A's from a conscientiousness perspective, then you're a type of person who can follow trading rules. But if you're almost 50-50, 3 A's, 2 B's, or 2 A's, 3 B's, and you're somewhere in between, then you're a type of person that can utilize a system, a mechanical system, but sometimes you will no longer be disciplined to follow those rules, and you'll be more discretion, and you'll do things on your own. In due course, in time, like for me, for example, systemized, I already know because I, as having classes also every day, I can see, and also doing my homework, I know automatically what to buy, what to sell. I know automatically what to do. So is it still system? Absolutely. The system isn't going to be based mainly more on the risk management and money management. Creating the probability is actually also very challenging. The only way a probability can be established if you have more than 2 people. Other than that, it's very subjective from an individual point of view. So I hope I answered your question there.
So A is consciousness or B? I think A or B.
If you have more A's, then you are highly conscientious.
Okay. So I'm like 2 and 3 throughout, and so how do I train myself to be, to be better trader, to be the other side, or since I'm pretty much in between, is there anything that we can push ourselves to do on the other side?
Okay, that's a very good question. So let me put in a whiteboard here. There's, in my own experience, after now teaching for, I don't know, 18, 19 years, the same process with everything. Doesn't matter with business, sports, or trading. There's 3 things that apply. You have mental, physical, technical. Technical, this is where you have your coach. This is where you have Eversley. It teaches you points of entries, exits, money management, risk management. This is where the system is being learned. You also have your physical component, where your nutrition is so important in trading. Sleep, how often do you sleep? And part of your nutrition too is exercising. Sorry, as part of your physical conditioning. How often do you exercise? Do you sleep properly? Do you eat well? Do you drink well? Last but not least, here, which drives everything, is your mental. Here, you have your belief systems that's being controlled, either that limits you, you have your limiting beliefs, or you have your supporting beliefs. If you have a good supporting belief, then you will have great results. It will be either positive or negative. If you have a lot of limitations, on the other hand, in terms of limiting belief, such as, it's too hard, I can't do that, trading is not easy, I feel lazy. So anything that in terms that creates the story that you can't do it, then they all go hand in hand. Then you'll have negative results. But if you have a good supporting belief that you can do it, you're perseverant, you're disciplined, you're focused, you're kind, you're abundant, you're loving. So everything that is creating of who you are being, of you as an individual, your limitations are your egos. Then you will have a great experience for whatever result that would be. But in most cases, our limitations or our ego controls us of who we are as an individual. So your question now is, can I overrule that? Absolutely. But how? You have 180 degrees that you can see that's in front of you, that's creating the 180 degrees that you cannot see that's behind you. These aspects of conditioning that leads to your own belief system creates of who you are as an individual. This is from what you see, what you hear, and what you feel. And that leads to cascades to either whether you're not good enough, you're not worthy enough, you don't love yourself enough, you're not confident enough. And hence, that has the principle of what we call the have, do, be. That if I make 10 winning trades in a row, I will do the act of trading, then I will be perceived as being successful. However, it doesn't work that way. First, you need to see that you are being successful But to see that is you need to have the level of confidence and courage that you can do it. And then you will have whatever you want to have. And hence from a learning component. That's why trading is an art, very similar to martial arts. I always, any person from a beginner perspective, I don't know in terms of the way how they trade, that if they say they want to learn how to trade, I will always see them as a white belt, because I don't know in terms of what level they're at. It's only from time we'll be able to dictate in terms of their results. That's why it is important to keep practicing, to put in live trades, because live trades will create your statistics. Live trading is the only way that you will be able to know your statistics, the data that you would be able to do and figure out are the things that you need to work on. That's why losing is an important element in trading. But in most cases, people see losing as a negative thing. But in my opinion, no. I get excited when I lose because I know that I can learn a lot from it. Is it maybe from a technical perspective? If it's from a technical perspective, then I need to find out how to make it the system better. From a mechanical perspective, if I lost, then maybe I'll say, what can I do? And this is also important. Please note, it is important for you to have time on your own. I would recommend go for hikes. I would recommend going for a weekend on your own and do a lot of self-reflection. So for my group, on the other hand, every Friday I have a group coaching session and we deal about performance, level of performance from a week-to-week basis to see where they're at based on their results. Because technical, they're all connected to each other. If it's a technical problem, then we fix the technical issue. If it's a mental problem, then we need to find out what is it that is blocking you from 100 degrees that you can't see. This is where your coach is important. Up to now, like I said, I still do have a coach. The only difference is simply, the amount of basic capital that's basically that I do trade. Of course, the more it is, becomes also tougher from a mental component. But do I have also mental blocks? Do I have fear? Absolutely. Do I make mistakes? Absolutely. But the question is why? How can I maintain those consistency and how can I control those emotions when the time happens in the moment of now? This is where everything happens, is in the moment, the now. It doesn't happen in the past. It doesn't happen in the future. So people get impulsive and they have anxieties because they think too much of what the future is happening, even happening without even noticing or focusing on what's happening right now. Oh man, I gotta pay this, I gotta do this, I gotta do that, I gotta do this, and all of a sudden 1,000 thoughts. Remember, we have 70,000 thoughts on average on a day-to-day basis. And that's why people get stressed so much, because they think too much either in the future, they live their life in the future, or they live their life in the past. A lot of regrets. Only if I did this, did that, did this. But they're not living their life in the present moment. Not unless if you start trading, because you don't know what's going to happen tomorrow. So if you're not taking profits within that moment, because greed is now controlling you, and then the next day it drops. A good example was the dollar CAD. It went up and then it tanked the next day. Now, one of my clients said, oh man, I didn't take, I was up 100 pips and now it's down 80 pips. Why? Because you don't know what's going to happen. I mean, it happens to everybody. It happens to me too. But taking profits along the way is important. And then you trade your stop, anything, any system. And as part of my system, in my opinion, any system that when your stop loss is now about breaking even, you have zero risk and you have infinite reward. And that's the best system that you're ever going to get. Okay, so very important. So to answer your question, can you change certain things? Absolutely, but you need a coach because you don't know the 180 degrees that's behind you. And that's the only way for you to figure it out, is that finding the root sources or the causes of the matter that's causing your results that you see from 180 degrees in front of you. So Zifty, I hope that I answered your question there. Does it make sense?
could you flash up your email address one more time, please?
Yes, I will do that.
Okay.
And then safety. For a long-term trader investor, be successful in day trading or swing trading, what character traits to watch out to overcome or to hone? Absolutely. A person who's longer term, someone who is a trend follower, can they be day traders? In my opinion, yes. You just also have to be aware in terms of, because longer term time frames, people are more risk seekers because they can handle it. But if you are aware from a short-term time frame and in making sure that you are not there seeking for excitement, you are seeking for a purpose of making money. Yeah, that's why it's important. What is your purpose as a trader? Important to answer this. What is your goal? What is your intent? Are you there seeking for a thrill? Are you there to fulfill whatever is missing in your life at this point in time? And these are the things that people don't understand or realize from a conscious perspective, because most cases people are not aware. But when you start to be aware and you have that intent, okay, my intention is to make money. Great, then make sure that when it's time for you to make money or the market is giving you money, then respect the markets. It's there, it's giving it to you, then take it. To take it, on the other hand, you need to see that you are worthy of receiving that money. But if you're not taking it, then that means that maybe from a subconscious perspective that you are not worthy enough of the money that the market is giving you. Then you're just there fulfilling something that's lacking inside of you. I did Tony Robbins in the early 2000s, and he teaches that there's 6 human needs. The first need is this need of certainty, where everybody will need that. The second need is a second need of uncertainty, to get that excitement, the variety, which is the opposite of need number 1. And then the third one is the need to be significant. That's why whether you are losing money or gaining money, you're seeking significance. To be number 4, to be validated in order for you to be loved. And then through there, if there's more to learn, then you have growth. And last but not the least is now giving back to the community. And that's in terms of those 6 human needs. You're here learning from Eversley because you have more personal growth that you need to do. You're here in this presentation at this point in time because you start to realize that maybe there's also beyond, from a technical perspective, that it is also now the 6 inches between my ears is the actual problem. On average, from my own research, it takes on average about 3 years for a trader who does trading consistently. It will take 3 years for that trader to finally realize that the problem is actually them and it's not a system. In martial arts, it's also the same. Once they get to a certain belt, we call blue belt, either that's where the critical point actually for a trader, either they will quit, find a new path, or they will hang in there and persevere to keep going. Martial arts is also the same. I've experienced basically in the past, which I'm going to be upfront also here, where students start to blame the system, start to blame me. In actual fact, I believe that one person reported me to CFTC, but you know what? It was the best thing ever for me because I knew that I had nothing to hide. So, I had a lawyer, put everything, CFTC didn't find anything because I followed by the book. And that's why now I'm also very careful in terms of, I'm always utilizing a disclaimer in there and also making sure that I'm notifying everybody that, hey, there are no guarantees, because the problem, it's not about me, it's about you. So if you're not performing and you're not getting the results that you want, then number 1, either you're not following your own set of rules, you're not following the system because you want to do the stuff on your own, then the problem now is you. That's no longer about me. My job is to coach you, to guide you to be where you want to be. But if you're not doing the work, which I expect you to do the work, which I believe probably Everest is also telling you guys that. And if you're not doing the work, then that's your fault. It's not my fault or Everest's fault or not the coach's fault. But if your desire, and this is where I'm going to be upfront with everybody in this room, if your desire and passion is strong to get to where you want to be, and in most cases, when I ask people, is they want freedom. Freedom of what? Freedom of time and money. Those only two things. I'm just blessed, in my opinion, that I have the freedom to do also what I wanted to do, and I'm very committed of doing this. I've been doing this now since 2003, like in terms of teaching and coaching people. At the same time, I also have a philosophy that when a student is ready, the master will appear. At the end of the day, people are not ready to listen in terms of what sometimes a teacher is saying. Why? Because it's a personalized journey. So to answer definitely your question right there, yes, anyone can be able to make money in any time frame, provided that you are highly conscientious, lowly neurotic, and you're risk tolerant. And you can be adaptable with any time frame there is. And if you can have that and being adaptable, you will make money, almost guaranteed. It's a big G word, but it is almost guaranteed you will be able to do that. So other than that, in my opinion, it is my pleasure. Thank you so much, Eversley, for inviting me. I'm sorry, I apologize. You've went 9 minutes overboard. Once again, like I said, I'm just so very passionate on what I do here. And yeah, thank you.
And thank you, Reynaldo. Please, everyone, give Reynaldo a big thank you for presenting this afternoon. It was our first time with me not presenting.
Thank you.
That was great. Appreciate it a lot, Reynaldo.
My pleasure.
And
I've already sent you an email.
So make sure you email him to get the copy of his book, which he's released. So make sure you get his email that down.
And yeah, and if you have any questions that is basically psychological trading related, please email me. Other than that, when it comes to listen to Eversley, he's a really good teacher, a good trader, and yeah, he'll let you guys get to where you want to be.
Okay, and I'm going to go ahead and let you guys know our next meetup is going to be in 3 weeks on Sunday, October 24th. We will be focusing on swing trading futures that day. And our futures trades usually take anywhere from a few hours to usually 1 to 2 weeks in most cases. So that type of time frame. So come back in 2 weeks, is go to the meetup page, sign up for that now, spread the word. And I'm going to go watch the 49er game, which I'm recording and I know nothing about. So please don't anyone tell me what the score is. And thank you, Reynaldo, once again. I'll probably see you this week in training.
Yes, sir. I'll see you on the mat tomorrow.
Okay, great.
Bye, guys.
Hello, Eversley.
Thank you.
Yeah.
And Reynaldo, this is being recorded. How will we be able to get to re-listen to this?
Either email me or I'll send out a link a little bit later on to everyone who was present.
Great, thank you.
Cool.
Bye, guys. Enjoy the rest of your weekend.
Thank you, Reynaldo.
I really enjoy your talk. I mean, I've been searching for something.
Thank you. Thank you so
very
much.
much.
Yeah, thank you.
Thanks, guys.
Thank you.